Hello, Ankar Agrawal here, founder of Collabot Finance, providing advice and enabling you to focus on your dreams and ambitions whilst enabling protection for your loved ones. Today, I would like to talk about Leslie's experience of taking out an income protection policy, a policy which pays out in the event that you're incapable of working or working in your own occupation. Several years ago, she left her full time work where she used to get multiple benefits, including sick pay for up to 6 months if she was unable to work. She was really concerned about being able to provide for herself and her family should she become sick and started to look into income protection policies. Ultimately, she took out a term income protection policy, which meant that the policy would pay out till she retired should she be unable to work in her own occupation as a project manager. A few months later, she was diagnosed with diabetes, which came as a complete shock. But in some way, she was glad that she had taken out the income protection policy, if, as a result, she would be unable to work. Business was doing well, and she decided to move up, taking a bigger mortgage. However, having got diabetes, she felt that she was not going to be able to increase her income protection to cover the increased mortgage expenditure. All was not lost, as the policy allowed her to increase the cover without medical underwriting, based on certain life events such as buying a house. So she decided to increase the income protection cover without having to disclose her condition. Unfortunately, a while later, she became too unwell to work and was off for a while. The GP had signed her off unwell and she made a claim which was paid promptly after her deferred period of 3 months. She was so relieved given that at least her income protection will cover her mortgage payments and leave some money to cover off the essentials. The insurance cover provided further support for her in terms of rehabilitation to help her recover within 2 years. It's one of the few decisions that she does not regret and continues to maintain her income protection cover. The Department of Work and Pension Research indicates that an individual is likely to have, on average, 11 jobs in their lifetime. It's important to consider whether your future employer will provide similar benefits or not, including sick cover, the duration, and whether they will accept any pre existing conditions. If not, does it make sense to get income protection set up now with a deferred period based on the amount of sick pay that your current employer provides and or any savings that you might have? We are sometimes so focused on protecting our assets such as houses and contents from fire and theft or our lives in terms of death. I would suggest that it is also important to address our working lives and the ability to provide for ourselves and our loved ones if we are unable to work. Remember that the amount that you can claim under the government is going to be assessed on whether you can do some tasks related to or unrelated to your occupation, and is between £58 and £113 per week. If you have savings of more than £16,000, you may not be able to claim universal credit. Hence, we cannot explicitly rely on the state to provide for us. I hope that you found Leslie's insight useful and sincerely hope that you would consider getting income protection to provide a shield from adverse events. Feel free to get in touch with your own broker or myself if you don't have one to discuss your protection needs. Thank you.